Welcome to the Final Bar, the show where we check out the most interesting charts to get set up for the following week. With some intermarket studies, we'll be finding out the inflection points for minimum risk and maximum reward. I'm Greg Schnell, and I'm here to host this Final Bar. We have a lot to cover off today. I did a presentation on a whole bunch of weekly charts worldwide, and they're really set up at a point in time that we need to pay attention to them. So that's going to be the scope for today's show. So we're going to basically do a global weekly review. We have a lot of charts to get through, like 30 and a half an hour. So I'm going to jump right in and get on with this show. I want to start with the first four charts. I'll just show you what we're trying to get through here. The first four charts are commodity related, and then we're going to break into Asia, then through Europe, and then come back into North America and cover off crude, gold, the US dollar, and the Canadian dollar right at the end. First of all, one of the things that we're starting to see, and it's a bit concerning, is the Bovespa has been outperforming the US market for 2 years. And just in late May, it started to break down and underperform. And we know there's some issues there. But the problem is we're seeing it in a few markets. So I want to bring that up. So we're now below both the 20-week moving average, the 40-week moving average, and we've broken through support. The 2-year uptrend in momentum has been snapped, and we're now below zero. So anytime the PPO goes below zero, that's pretty significant in my work. So one of the pieces that I'm worried about is that the commodity chart, in this case Brazil, is starting to break down. Moving on to Russia. What we see here in Russia is, we're still in a bull market mode on the RSI, but in terms of relative strength, we're also starting to break down, and we're near 2-month lows or 2-year lows in relative strength. We are below the 20-week and the 40-week moving average, and there's a big 3-month downtrend that's going on that we really don't have in place on other charts. So that's not very bullish, and obviously there's tariffs involved and a few things here, but you'll see through the charts that we're going to go through that this trend seems to be broadening out, that there's more issues. So here's the PPO, and it's below zero, and it snapped the trend line. So that chart is also on a sell signal. So we've got two commodity countries on a sell signal. Australia, still in a bull mode according to the RSI. We're above the 40 level, so that's always good. But we do have declining relative strength for the last 8 months, and we did have a 4-month little bit of an uptrend here within that big overall downtrend, and now we've broken back down and we're starting to slide a little bit. So even while the US is trying to rally here, Australia is basically pausing, and we're kind of in a 4-week consolidation pattern. Again, this is on Thursday, so we've got one more day of the week to go. But the bottom line is starting to wonder if we've got the momentum here to get this done. Now, one of the concerns I have is this 2-year uptrend line has cracked, and we have flat lows and highs. So we have previous highs were the same as the current highs, previous lows the same as the current lows. But we have broken this uptrend, so that's why I said it's difficult here. But you've broken the uptrend. What I'm expecting is this kind of back tests and rolls over. So that's not really what I want to see, because I'm obviously a commodities guy with the show Commodities Countdown. But the problem we're having here is this is a bit of a topping structure so far, looking like a bit of a double top. Moving on to Canada. So I think Australia, the chart I just showed, is kind of the commodity supplier to Asia. And you'll see why I'm a little bit worried about that chart when we get to the Asian charts. So TSX is the Canadian index. And what we see on that chart is we got a bear market signal actually in February, and now we're still under the 60 level, which is common in a bear market. So you can see back over here on the left, the RSI just stayed tucked under 60. And then when we got above 40 and went all the way back up to 70, this was a whole bull market. Well, now we've changed our tone here, and we're back up to the 60. So it's not quite as bullish as we want it to be. We have a big downtrend that's been going on for about 1.5 years of underperformance, so that's not as good. And again, the Australian market's underperforming as well. We are trying to break out to new highs here, which the US market is, the S&P is farther behind, but the NASDAQ's already broken through. So I think this is kind of critical here. So far, we're chopping in a channel, and we're very close to previous closing highs up in this area here from early January. But the problem we have on this one is we've got lower highs and lower lows, And anytime you get a PPO before zero or below zero, what you normally see is the next high is the final high. And it may or may not be higher than the previous one. It could be below. But the bottom line is we briefly dipped down. Now we've come all the way up. We made a higher high, came all the way back down, and now we've made a lower low. So I'm expecting that this probably rolls over here, and the market fails in terms of momentum, and that's as we test this high. So we might actually go higher once again, but getting a little leery here with the way this looks. So so that chart specifically concerns me. Now, looking at the Shanghai, what we see here on the Shanghai is that, we're trending below the 20-week and the 40-week. There's a downtrend basically since the January highs. And we've got a downtrend on the PPO. We haven't got a crossing signal, as you can see here in the Zoom panel. But the problem now is we've also started to make new relative strength lows going back to 3 years. And in here, we were kind of muddling along, but now we've actually started to decelerate as the US market has turned up. This Shanghai market is underperforming. According to the RSI, we're still in bull mode by staying above 40, but we're just barely there. So this is pretty important. We made new 12-month lows yesterday or this week. And these 12-month lows are obviously problematic for us if we're going to keep breaking down. And we've long since broken the uptrend, and it's this idea, and you'll see it here. So we've broken the uptrend, momentum is dead. We bounce up, back test this momentum line, and then roll over. And as you do that, you kind of mark your final high. Doesn't have to work out like that, but it's amazing how common it does happen that the momentum kind of tries to make a final high rally and then gives it up and then rolls back down. Okay, so now we've got Shanghai, which is, I'll call it the broader Chinese market. Then we have the Hang Seng, which of course since 1999 has been under China's control. So we're about 19 years out on that, believe it or not, already. And what you see here is the big solid 40 level. And the Hang Seng's actually been very strong. And you can see we've been in an uptrend here since 2017. Recently broke to new 5-month lows, and I can also put one more piece of trim on this chart, and that is that we're starting to break this longer 18-month trend. So that's worrisome for me, and I'm just going to leave that off the chart. That's worrisome for me, that 18-month trend is breaking. So again, the Shanghai weak, and now the Hang Seng starting to join the party. Not really something I wanted to see happen. For commodities, normally the Asian markets are one of the biggest buyers of commodities. So we want that to be bullish. And you can see this 2-year trend line now, almost 2.5 years. We're sitting right on it. We're trading between the 20-week and the 40-week moving average, right in the middle here. And we've broken this uptrend line. So the momentum here is getting low, but we haven't gone below zero. So we can still rally back up or whatever. Doesn't always have to give us a signal like I'd like to see. Could just kind of go kerthump. But what I'd expect here is some sort of a little rally trying to make a higher high. And then if it fails, that would be fine too. But just in general, we're starting to see too much weakness in the Hang Seng after, outperforming for 18 months. So something seems to be changing in that market. Now here's the Kospi, and of course this is for South Korea. And what we see, obviously with all of the stuff going on with the Singapore summit, the South Korean market has recently just broken to fresh new lows in terms of relative strength. Really been underperforming quite a bit recently. And now we've got this big kind of topping structure, left, head, right. And we can draw the line under there roughly a year long. But we've broken this downtrend line on the PPO. So that's bullish. The big thing is we're right near zero, and you can see it looks like we touched and now we've turned down again. So this is starting to be concerning, and we have one more day to go to get our Friday recording. But we basically made a brief stab above last week's high, and then now we're below last week's low and closing lower. So even after the Singapore summit, we're starting to break down here. So that's a concerning level. And again, this big chart here or this big trend line here marking the head and shoulders top is obviously in play. Let's go over to the island of Japan, or the islands of Japan. And what we see here is a big 2-year uptrend, and the moving averages have just crossed in a bit of a bearish formation, so the 20-week below the 40-week. But we do see that the price action is above there, so it would be starting to pull it back up. Now, this chart looks pretty similar to the US market, where it went straight up, had a big pullback at the end of January into early February, and the US market tried to make a good low around April 1st and rally out of there, made another one around May 1st. But what we're starting to see here is, 5, 6, 7 weeks having trouble making any further headway. And it's also equivalent to kind of this left area from the high on the chart. Looking at the momentum, we see the big upswing in momentum, but it did go near zero or just below zero. So now you're kind of wondering, is this kind of going to mark the final high? And if it was to roll over right here, this would, be pretty concerning. And again, we're making lower lows on the lows. So when I like to think when you touch zero and then kind of roll over, much like it did back in 2015, you get this down swoop, and then really it just breaks down as you back test the zero level. So I'm focused here to see what's going to happen on the Nikkei, and the Nikkei tends to be a better indicator of risk on and risk off. In terms of relative strength, let's just say that the Nikkei's kind of performed with the S&P 500 really for the last 2 years. It's wobbled a little above and beyond, or above and below, but for the most part the same. Okay, so that kind of concludes the Northern Asia. Now, Indonesia, not a big country that I want to cover in terms of their stock market depth, but they do have 800 million people, so it's worth paying attention to what's going on there. The third largest population over there. And so here we have this level that is making new relative strength lows in Indonesia. You can see we've clearly broken the uptrend. PPO well below zero. We've broken the 2-year uptrend on that. And we've started to get below 40 on the RSI. So this is suggesting more of a bear market tone. And again, I don't consider the Indonesian market to lead the world. But what we're seeing is, the breakdown in Brazil, the breakdown in Russia, the Shanghai market soft, the Hong Kong market changing its tune in terms of relative strength, South Korean market having a bad week after what should have been relatively bullish news with peace setting in. And then the PPO pulling back hard here and giving us a signal and breaking the big uptrend in Indonesia. So lots of these markets are starting to struggle, and I think worthy of paying attention to. Now, here's the India stock market. And again, they have the best demographics in the world in terms of youth, employment, all that kind of stuff. And they have performed pretty much in line with the S&P 500, for the last 2 years, but especially in the last year, it's been pretty much, in line. And you see this big uptrend, and that's working well. And you can see testing the prior highs, just like the TSX is doing. But we have broken this uptrend. We're making lower highs and lower lows in terms of momentum. And so, we haven't hit the zero level here, so maybe we've got more rally in it, much like this one, and just keep going. Don't know. But I will say we have broken this uptrend, and it's a 2-year uptrend, so it's not a short one. And so that starts to influence my thinking. If one of the best demographic models in the world is struggling, what's going to happen here? So watching it very closely, as we test these prior highs. And again, we've spent about a month trying to do it. So we'll see if we've got any more horsepower to kick up and get through here. But it's a bit of a concern now that we've got so little momentum. And, coming out of the hole, you'd like to see kind of this big swooping move where the lines get farther apart, the actual PPO line and the signal line. We're not getting that here. They're basically flat. So there's very little momentum. Okay, moving into Germany, the big thing that I want to talk about here, so Asia, I've kind of laid out the case how it's soft and in some places actually breaking. In Brazil, it's broken. In Russia, it's broken. And I showed the Australian market as okay, but remember we had the sideways PPO on that market where the flat highs and flat lows, but we'd broken the uptrend. So Asia in general as a package, I would say is shifting sand and it's starting to roll over. And that is a little bit concerning, especially for the, I'll call it industrial metals and commodities and that type of thing. The bigger question is what's going on in Europe. And so now we're going to get into that. And when I was in Greece a couple of weeks ago, I was staying at a hotel, and Mario Draghi was checked in there, and so the press were everywhere. And the Greek finance minister was meeting with Mario Draghi, and the press hounds were just stationed outside the hotel full time, watching his every move. If he'd come out of the room, if he'd come down, getting in his cars and driving away. So really big news on Europe, and I think we need to check into those charts. So here we go. The DAX is still exhibiting bull market behavior according to the RSI, but you can see we've really started to underperform the S&P 500, and a breakout in this underperformance would be helpful. Haven't seen that yet. Now, we do have this sort of head and shoulders topping structure building up on the charts. And as we test this right side here, we do have the 20 week below the 40 week. And the problem with this is obviously, when you're getting this topping structure, you kind of really want it to accelerate up and through. So this 3 week pullback in here didn't help. Now, this week's price action's a little bit better. We'll see if it's got any momentum. Looking at the PPO, you can see, late January when the market cracked. So right at the high here, we broke down through the momentum line, and that was pretty big shifting sand. We've come down, we've made a big lower low. Now we're coming back up to this trend line. Now the real question is, does this hold, or do we get a little bit higher and then roll over, or do we actually start to turn and accelerate to the upside? Not normally, you would like to see at least a higher low, some sort of positive divergence as price came down here. And we didn't get it back in 2015, 16, but here we still have lower lows in place. And again, the PPO is just barely above zero. So I would say in the next 4 weeks, we're going to get a decision. Is this going to roll over? And if this was to roll over, that would be a problem. If this was to break out, obviously very, very bullish, and we want to be on board with that. I think the US dollar holds a lot of the keys, and we're going to get into that chart in a little bit. But the big energy here for Europe's largest industrial market is, does it have the horsepower to go, or do we actually fail here? And what you notice on these PPO charts is when they're below zero, it's usually a pretty good indication that you're in a downtrend. And when they start to go down there, you want to be aware of the change in trend. Okay, so here's the CAC Courant, the French market. And what we see is the 40 being held on the RSI. So definitely looks like a bull market. In terms of relative strength, the French market's been about the same as the US market over the 2-year view. But you can see really since mid-2017, it's been downtrending, brief rally here for a couple of months, and now it's given it all back. So it's back near the relative strength lows as it's trying to make this final high. So even as it came up here and made a higher high, it rolled over. Let's look and see what's going on down below in the momentum. So you have a big uptrend, 2 years, and it snaps almost 2 years to the day when it broke out to here. Now it breaks down, gave us a brief dip below zero, and now it's trying to rally. So again, it could still, turn and rally higher and become a big, new raging bull market, or this whole thing can give it up right now and fall back over. So I think the fact that we've broken the uptrend, come below zero, is a potential for the final high to be in. Now, again, the final high doesn't mean that it's a higher high or a lower high. It could be either a higher high, the same high, or lower high. It just means it's kind of the last rally before the market rolls over. So what we've seen here is basically a breakout 1 week, a pullback the next week. Now we've spent 3 weeks consolidating. We're below the uptrend line on actual price. We're below the uptrend line on momentum. And what we want to watch for here is just how this behaves. So in the next couple of weeks, I think this is pretty important. A breakout to the upside would be very bullish. So watch closely. But I think the other problem we've got here is just this negative signal here that this could roll right back over. Okay, getting into Great Britain, what we see on this chart is a big 2-year underperformance here by the British market. And as we've got this big uptrend in play here, I'm staked out way along these lower lows. Probably could build a higher one up, but it doesn't really matter. The bottom line is we have a big uptrend. The PPO has been going down for a year and a half, and we gave us a big negative signal. Now, maybe again, it rallies out of here. So the higher than expected bounce, is this a new bull market? Because it's actually above this peak, and it could be. But I think the real question is it possible for Britain, with all of the things going around Brexit, that it can actually break out to new highs and hold those new highs? Maybe it can. Well, we're about to find out. And of course, the histogram's been declining for 3 weeks here. So we're about to see if this actually starts to get pulled over. And we've spent about 6 weeks in and around this level, with the close kind of just around this 345 level on the Dow Jones United Kingdom Stock Index. So, okay, looking at the Italian stock market, what we see here is a big uptrend for 2 years. It's recently broken below it. Looks like the 20-week is going to cross below the 40-week. Relative strength dropped down to new 52-week lows. We still have a bull market signal on the RSI, but you can see we're down below or near zero on the momentum, and it's been declining for a year. And the stock market has kind of wobbled with a flat base, higher high, higher high, and now it's broken through that. So I usually like to call this an indecision pattern, where the swings get bigger each time. And so now we're rallying back up. We'll see if they get stalled at the 40-week or the 20-week here. Again, watching for all of Europe in the next 4 weeks. I think there should be some pretty important signals coming out of there. And of course, we've all seen the news on the Italian debt, how it's been soaring relatively quickly recently. So with the PPO getting down to the zero level, this is potential for maybe one more rally to mark the final high, and then this rolls over. Spain, really interesting market here, because it's got quite a few different elements than the other charts. But what we see here on Spain is the RSI still in bull mode, saying it's above 40, and that's important. What we do see is the relative strength right down near the lows on the chart. The stock market's actually been dropping for the last year, which is quite different than most of the other charts we've seen in the world. And the 20-week is well below the 40-week, has been for all year, going back to November of last year. And you can just see we continue to decline. We have a giant uptrend here for 2.5 years. And the real question is, does this uptrend hold and we finally start to turn it up higher? That would be bullish, obviously. Or do we roll over here now? And one of the things that's interesting is, even though the PPO has been below zero and the chart's been weak and trending lower, we're actually at a point where we might break out to the upside here, but we're also right at the zero line. So still under the zero line. But what you want to watch for is, does it roll back over? And so I'm watching this quite closely. They've just had some separatist issues. Then they've had issues around their political leader. So there's some things going on in Spain, but clearly the market's been underperforming for over a year. And now we have to watch and see what's going to happen here. But you're below zero. And so breaking out above zero and above this trend line, I would say, is pretty bullish, and you'd like to be on board as soon as possible. But very close to call this one. Okay, now let's go to the U.S. market, now that we've kind of given the world tour, and show how this sets up. So here's the S&P 500. And you can clearly see a big RSI 40 holding a huge RSI level back in January, pulled back and came back up to 60. Now, again, 60 is kind of the level the market's at when it's in, when it ends up becoming a bear market and dips down quite hard. So we've had this 2-year uptrend. We're rallying to try and take out the prior highs. And I get all of the bullish news on the economy and all that kind of stuff. I'm just saying what the chart's telling us. And so here we go with a 2-year breakdown in momentum, and it's coming down. It's not below zero, so it's not kind of saying the final high. But anytime you have a big collapse in momentum and a rally after, it's important to follow that rally and just see if it's got enough juice to really finish the deal. And so now as this comes up, I'm watching to see, obviously, if Europe started to roll over in the next 4 weeks, that would be a big clue. Okay, let's go on to the NASDAQ. And on the NASDAQ chart, what we see, huge bull market. This thing staying above 50 full time for 2 years, up and away. We made higher highs this week. Important week to watch because we've just broken out to new highs. So let's say we hold it this week and reverse it next week. That would be a failed breakout. So important time for us to pay attention. We did have a almost 2-year uptrend here that we can easily draw the line under. A big drop in momentum. So now we've got lower lows. And now what we'd watch for, do we end up making a lower high and rolling over? Don't know that that's going to happen, but this lower low means that we need to pay more attention because the market's not quite as bullish as it used to be. So those are the kind of things I'm watching from the overall market. Now we're going to cover off the West Texas crude in the last couple of minutes here. And what we see is we've got this big uptrend, and crude is now below the uptrend. It's below the 20-week moving average, which would be the center of the Bollinger Bands, and actually just starting to trade above it, but it's right at it. So I think that's important to acknowledge. We do have negative divergence on this previous high here. So the high on a lower high in price is now lower with a higher high in price. So this divergence is what we worry about a little bit. It kind of says slowing momentum. And we're right at the 2-year uptrend line for crude. So if this was to start to break down, I'd want to be much more cautious on crude. Okay, here's gold, and gold is more difficult. Obviously, we've had lots of issues around it, but we see this chart sitting here trying to build this base and breakout. The 20-week is still above the 40-week, so that's bullish. We're right at this zero level, and that's kind of where gold is based the last 2 times. So, as I talked about making a higher high, well, here we sit trying to get through it. Okay, last chart, US dollar. The big point on this chart here is we see this level coming into play. We're in a bear market, and we're right here at this hover level. And I think if the U.S. market rolls over, and you'll notice lots of changes in this chart around the middle of the year, kind of a big July low here, and took off end of year change here, pretty much near the highs right here on Jan 1, 2016, right here near the highs in July 2015. So there's lots of reasons to be aware of the change in the markets in July, and especially the US dollar is a big one. So we've got this big uptrend going here, and now we're sitting here playing with this double top scenario, and we've also got a 3-year momentum line on the US dollar, and we've briefly broken through it, but we've been putting in lower highs on the histogram for 3 weeks. I would suggest if the US dollar rolls over, that will give these emerging markets economies chances to kind of get going again and get an up thrust, and then that might be worthy of moving back into the European markets and maybe some of the emerging markets, maybe even Asia. But the real question is if that US dollar all of a sudden starts to break higher, I think that's going to make it more difficult. And you can realize as this went higher, that's when Brazil and Russia broke lower. So we're starting to see that trend develop. And again, the Shanghai has been going dropping, more recently. So with all of that going on, I think it's pretty important that we start to watch for a big break in this U.S. market. So with that, I'm going to wrap up the show. Thanks for joining us on today's show. The final bar airs on Thursdays at 5 p.m. Eastern and can be found on StockCharts TV, scheduled for your viewing convenience at other times during the week. It is also available on the StockCharts YouTube channel. With that, have a great weekend and good trading.